Welcome to Unit 9, our final unit. Line of sight to Series B and beyond. We have covered customer credibility and go-to-market systems. Now it is time to prove you are building toward institutional scale beyond Series A. When we approached our Series C, investors did not just evaluate our current performance. They wanted to see our pathway to exit and whether our business model could sustain growth for future rounds. Companies that succeed at Series B show clear progress from project revenue to recurring contracts. This means broadening from domestic focus to international diversification and from founder dependency to proper institutional governance. In this final unit, I will show you how to build strategic foundations that help your business succeed at the growth stage. Series B investors want to see a clear exit strategy within 5 to 7 years. You should map out your most likely routes, including trade sale to aerospace primes, perhaps a private equity roll-up, an IPO, or possibly an alternative structure. It is therefore important to study relevant precedents. Planet Labs' IPO via a special purpose acquisition company, or SPAC, in 2021, for example, showed the path for Earth observation companies. Maxar's acquisition by Advent International highlighted private equity interest in mature satellite services. UK space companies are more often considering international exits these days, given the deeper capital markets abroad. This shift increases the need for early governance preparation and regulatory compliance across multiple jurisdictions. Investors typically look for annual recurring revenue between £10 and £15 million per year, with 70 to 80% coming from repeat business. Demonstrate your gross margin improvements to investors and a clear route to profitability within 18 months. It is also vital to build a customer base that goes beyond the UK and the UK government. Aim for international contracts, relationships with prime contractors, and significant progress in non-government segments to avoid concentration risk. Strengthen your leadership with experienced CFO and CO hires. Bring in independent chairs and run proper board committees. These actions help you demonstrate governance maturity. Investor types each have distinct motivations and constraints. Venture capital firms want big returns and will expect to see aggressive scaling, but are willing to wait longer for space companies that have real traction. Corporate venture capital from aerospace primes can deliver more than just money. These investors bring relationships, technical credibility, and often open the door to future acquisitions. On the other hand, private equity generally only becomes relevant after Series C once the business has reliable, recurring EBITDA and mature operations. Prioritize recurring service revenue over one-off sales. Multi-year data subscriptions and operational support contracts will typically bring you a higher valuation than standalone manufacturing projects. As we've mentioned already, be sure you are ready for international expansion. This means having your export controls in order, understanding data residency rules, and securing spectrum licenses. Take ESG seriously. Invest in debris mitigation, sustainable launch practices, and strong governance or whatever is relevant to your company and sector. These extras now play a real role in future investment decisions. As we begin to close, track your progress towards Series B with a clear set of metrics. Include revenue progression, margin improvements, customer diversification, and governance upgrades. Make an exit options matrix that considers all major routes. Map out your capital strategy and show which investor types fit your model and trajectory and when. Benchmark your company against public comparables so you can position yourself competitively for the next funding round. The most important message is to show how you have advanced beyond the fundamentals of Series A. Signal that your company is now on a path to scale. In the space sector, the winners are companies that bring together technical excellence, commercial discipline, and institutional readiness. Take a systematic approach and you will unlock growth investment. Don't forget we have additional support materials including investor type comparison table, exit options matrix and buyer, IPO comparables tracker, and Series B readiness tracker. Use them to give your business the edge. And remember, Series B success starts with Series A discipline and clear plans for sustainable, scalable growth. This completes our journey through investment readiness. By combining this track with Track 1's commercial foundations, Track 2's governance discipline and robust operational systems, you have the pathway to scale from a promising startup to an institutional success story. Next, Join us for our Q&A session where we will address your specific challenges about growing space businesses from Series A through to exit. Thanks for joining this program on space sector investment readiness. Good luck and all the very best of success with your entrepreneurial business endeavors.